Hello, my dear students. Hope your preparation is going on well. So, in this video, I'm going to explain about RTP. So, whatever RTP for the CA into Audit May 2024, which has been released, so that RTP I'm going to explain. So, once again, I'm reminding you before you go for the examination, it's very important you refer the MTPs and RTPs again and again. I'm reminding you. And this RTP also I will be explaining you in a detailed manner. But I suggest you, like I always say, don't directly come and watch this video of RTP. First, what you should do, you should try to solve the RTP on your own. First, try to solve the RTP. If at all you are not understanding something, if at all you are feeling stuck somewhere, so then you can come back and watch the video for references and explanation. So first, try to solve it on your own. Why? Because when it comes to explanation of RTPs and MTPs, I'm going to go down a little bit deeper, so that's why it will take some time for me to explain, but I suggest you try to solve it on your own. If at all you are getting stuck somewhere, then please come and refer this video for clarity. Okay, right. And the good thing about this RTP is, one of the important thing about this RTP is MCQs. Here the MCQs are very, very conceptual. The good thing, there is nothing much tested in the descriptive part. Most of the descriptive questions are straightforward, but the good part about this RTP is MCQs are bit very interesting, especially case scenario based MCQs are very interesting. So let us try to start our discussion with that only. So we'll start with MCQs. So case scenario based MCQ 1. First we'll start with case scenario based MCQ number 1. What does that say? DES and Co. Chartered Accountants are the statutory auditors of SAR Industries Private Limited, a company engaged in manufacturing business since 2018. So they told name of the auditor, name of the client. Very good. And business also, they told they're into manufacturing business. The company is operating from rented premises and it does not have building of its own. Okay. It has upgraded its machinery last time in 2020. So last time when they have upgraded the machinery was in the year 2020. Except interest in the company, promoters, directors, KMPs and their relatives do not have interest or ownership in any other entity. So whoever promoters are there for this company, whoever directors are there in this company, whoever key managerial persons are there in the company, they are not having any significant interest in any other companies. Also, the company does not enter into any business dealings with the promoters, directors or KMPs or their relatives. So here what they are trying to clarify in this paragraphs is, they are telling in the given case, there is no related parties. The company is not having any major related parties, and also they do not have any related party transactions. They are not having any related party. They are not having any of the related party transactions also. So what is the standard which is talking about related parties? SA 550. Do you think SA 550 is it having any role to play here? SA 550 is not having any role to play here. Why SA 550 is not having any role to play? Why? Because through these paragraphs they have clearly told the company is not having any related parties and they are not even having the related party transactions also. So SA 550 doesn't have any relevance here. The directors and key managerial persons get only reasonable remuneration. They are only getting reasonable amount of remuneration. They're not getting any higher amount of remuneration. A reasonable remuneration they are getting. Though company has an internal control system in place, it has not appointed internal auditor. The company is having internal control system, but they did not appoint internal auditor. And even it is also not mandatorily required to make such appointment under the provisions of the Companies Act. That means this company is not even getting covered under Section 138 of the Companies Act. Section 138 talks about which kind of companies are required to mandatorily make an appointment of internal auditor. So the company is not even getting covered under Section 138. So that's why they did not make an appointment of internal auditor. Okay, fine. Next one. DS and Co have accepted the audit for the above company for the year 2020-23 for the first time. This is the first time this audit firm is accepting the audit. Promoters and directors of the company are known to the engagement partner only socially for quite some time. Might be they have met at a function, they have met at a social gathering. So the auditor of the firm, this audit firm and this firm partners will be there, no? So that partners, the chartered accountants and the promoters and directors of the company, they have met recently in one of the social gathering, like in a function, in a social gathering, in a meeting, somewhere they have met it. They have met recently. So promoters and directors of the company are known to the engagement partner only socially. That means they know it only as a part of some social gatherings and all. That too for a very short period of time. That means here they are trying to say there is no close relationship. The engagement partner is not so familiar with the promoters and directors. The promoters and directors have been known to the engagement partner very recently, and also they have met at a social gathering. There is no personal relationship which is there here. That means you might get confused. You might feel that, okay, since they are socially known for some time, there might be familiarity threat. No, familiarity threat will arise when you have a personal association with the client. In the given case, they did not say any personal relationship is there. They're not relatives, nothing like that. But just they know them socially, means in a meeting or in a gathering, they have met. That's it. Just if you know them socially, that doesn't mean there is a familiarity threat here. Next one. However, it is for the first time that any type of professional work related to this company has been accepted by them. So they don't know the promoters also so well for a very long period of time. This is the first time they have accepted the professional work for this company. While formulating audit plan for the company, CAD engagement partner has planned certain risk assessment procedures and further audit procedures consisting of test of controls and substantive procedures in relation to different areas. So while planning the audit of this entity, in the audit plan, he included risk assessment procedures, he included further audit procedures, he included test of controls, he included substantive procedures also. Very good. So the following is an extract of the financial information. Now they are giving an extract of the financial information. Some of the part of the financial information they are sharing here. What is that? So last year's data, current year's data, both they have given. Turnover, what is the turnover? Last year it was 15, current year it was 30. Okay, turnover has increased by double. Inventories, last year it was 2, current year it was 5. Property, plant and equipment, gross block will remain the same. So if you don't make any new additions, gross block is going to remain the same. Property, plant and equipment, net block they are telling. So that means they might have purchased some machinery in the year one, last year only. So last year there was no depreciation. But in the current year, when it comes to 1.25, it has been, in the current year there is a depreciation. In the current year there is a depreciation. There is a 0.25 lakhs of depreciation is there. See, but here there is a little bit tricky. Here's something you need to observe. See, in the year 21-22, they told that their property, plant and equipment was 1.25 crores. In the current year, in the last year, there was no depreciation. If you pay close attention, there was no depreciation charged. Even net block is also 1.25 crores. But you have to, but this should raise suspicion. Why? Because if you see here, they are telling the company has upgraded its machinery last time in the year 2020. That means the machinery was existing from the year 2020 only. That means there should have been some depreciation even in the year 21-22 also. So no. Did you find this thing here? In the last year's financial data, property, plant and equipment, gross block, net block, both is same. So there could be two reasons. One is there could be genuine reason, might be depreciation is there, but new thing has acquired. But it is clearly telling that no asset was acquired. Last updation was made in the year, last updation for the machinery was made in the year 2020. So that means if the machinery is there from the year 2020 only, in the year 21-22 also there should have been some depreciation. But if you pay here, gross block and net block both are remaining the same, which is something suspicious here. Why? Because there should be depreciation. In the question they have clearly told there is a risk of material misstatement here. There might be a chance of happening of misstatement in the depreciation of the last year. So last year they might not have charged the depreciation. Okay, anyhow we are conducting the audit of the current year. But when it comes to the last year's financial statements, I was able to raise a suspicion here. You should get a suspicion here. Next one. Gross profit. Last year's gross profit was 3.75. Current year's gross profit was 6 crore, which is clearly evident because since the turnover has gone up, obviously the result will be shown in the gross profit also. Trade receivables has also gone up. Last year it was 5 crores, it was 12.5 crores. Whenever the sales increases, obviously the trade receivables are also going to have a impact. Okay, so they have given the extract of the financial statements. We have done some sort of analysis also. Then the PP items consist of machinery only. While planning procedures in respect of property, plant and equipment, auditor has included audit procedures like inspecting and reviewing company's plan for performing physical verification of the PP. So they are telling now some procedures regarding PPE which he has done. He has done the inspection and reviewing the company's plan for performing physical verification. So how the management is doing physical verification of PP, that he understood. He analyzed depreciation method, what method of depreciation they are using, that he has analyzed. And he verified whether the cost of PPE items acquired during the year with the purchase bills. He is verifying whether the cost of PPE is correct or not with reference to purchase bills he is verifying. But practically speaking, you should not rely only on the purchase bills. Why? Because when it comes to capitalization of the PPE, even whatever incidental expenses are there, whatever incidental expenses like installation expenses, till the time you bring that asset to use, whatever expenditure incurred, that also should be capitalized. So no. So you tell me, in order to know whether the cost of the PPE is correct or not, can you simply rely only on the bills? No, only on the purchase bills you cannot rely. Why? Because we have to verify other things also like installation expenses and whatever transportation charges, freight inwards, till the time you bring that asset to use, asset is ready for use, all that expenses should be capitalized. So verifying only purchase bills will not be enough. You need to verify the other things also. And also he is recalculating the depreciation. So obviously this you can do. In order to know whether fixed assets balance is correct or not, you can even do recalculation of the depreciation. If you know what is the carrying amount, if you know what is the depreciation rate, you can also calculate that depreciation amount. So if you pay close attention here, regarding PP, he is performing 4 procedures. What procedures he is performing? He is performing, yeah, if you pay attention here, he is inspecting and reviewing company's plans for performing physical verification of PPE. Is that correct? Yes, this is relevant. Assessing depreciation method. He is also analyzing what kind of depreciation method has been used by the client. Is that also correct? Yes, that is also correct. Next one. He is also verifying cost of PPE items during the year with purchase bills. You tell me, will it be enough to verify cost of PPE only with purchase bills? No. Why? Because incidental expenses also will be capitalized. This alone is not the relevant audit procedure. You have to check the other incidental expenses also. And you are doing the recalculation of depreciation. Okay, that is also correct. If you are doing recalculation of the depreciation, that is also fine. So what is the irrelevant procedure here? The irrelevant procedure is verifying the cost of PPE items during the year with the purchase bills only. You should have to consider other items also. Okay, fine. Next one. Further, while performing risk assessment procedures to identify the risk of material misstatement in the financial statements, engagement partner has come to notice that there is a considerable variation in the gross profit ratio as compared to last year. So he calculated the gross profit ratio. So how to calculate gross profit ratio? Gross profit divided by turnover. So if you calculate this ratio, 5 divided by 15 into 100. So how much it will be? 5 divided by gross profit. Sorry, not gross profit is not 5. It is 3.75. So sorry. So gross profit is 3.75. Turnover is 15. How much it is? So if I calculate 15 into 25%, I guess. So if you calculate it, so just let me calculate it here for reconfirmation. 3.75 divided by 15. So it will be 25%. Yes, this year it is 25%. And in the year 2023, what is the gross profit ratio? 6 divided by 30, which comes to 20%. So when compared with the last year, in the current year, there is a fall in the gross profit ratio. This he came to know when he is performing risk assessment procedures. So further, while performing the risk assessment procedures to identify the risk of material misstatement in the financial statements, engagement partner has come to notice that there is a considerable variation in the gross profit ratio as compared with the previous year. During the performance of the substantive procedures, he has also studied data of purchases and sales of the company during the year under audit and has also compared such data with preceding years and also earlier years also. He is also comparing the sales and purchases data also with the previous year. Okay, fine. This is what he has done. See, the key takeaway from this paragraph is he was able to find a huge difference in the gross profit. That means he was able to find a significant difference in the gross profit ratio. So there might be a chance that the management might have manipulated the purchases and sales. So there is a risk of material misstatement. Here there is a risk of material misstatement. So auditor identified risk of material misstatement on the basis of variation in the gross profit ratio. And one more thing also I have brought it to your attention while understanding these facts. Here we have seen that in the last year there was no depreciation charged. Why in the last year no depreciation was charged? Might be the management is not following the proper method of depreciation. That could have an impact in the current year also. Might be opening balances also could be wrong. Last year, if they did not charge the depreciation, that could have an impact on the current year's opening balances also, no? So here there is a risk of material misstatement is very high. The chance of happening of misstatement is very high. And also here there are more chances that audit procedures performed by the auditor might also not be able to detect a material misstatement. Here the auditor, there is also a chance that the risk of since there are so many misstatements that is possible. So one is there is a difference in the gross profit ratio. And the other one is there is no depreciation charged in the previous year. So the chances of happening of misstatement is high. When the chances of happening of misstatement is high, obviously the chances of not detecting the misstatement also could be high. So no, there are more chances some misstatements might go beyond your notice also. So this is what has happened. Okay, right, understood. So now based on these facts, we are supposed to answer the questions. Let us have a look at the question. Based on above, answer the following questions. Keeping in view description provided in the case scenario, which of the following statements is likely to be most appropriate? So depending on the above facts, whatever we have read, they are asking us to determine the most appropriate sentence. Let us see what is that. Engagement partner is known socially to the promoters and directors of the company. This situation involves advocacy threat. Do you think it is? When advocacy threat will occur? Advocacy threat will occur when the auditor supports the client's opinion without any reasonable basis. So just because you have a social connection, does that mean there is advocacy threat here? No, advocacy threat doesn't matter here. Next one, engagement partner is known socially to promoters and directors of the company. The situation mandatorily involves familiarity threat. They're telling compulsory there is a familiarity threat. See, just if you meet the promoters once in a social gathering, that doesn't mean you are familiar. So this doesn't mandatorily mean there is a familiarity threat also. The situation reflected in the case scenario may not constitute a threat to independence. Irrespective of this, detection risk in the engagement is low. No, detection risk is high here. So it will not constitute a threat to independence. Yes, it is half correct, but they are telling detection risk will be no. Why? Because there are more chances of happening of misstatement here. So detection risk is also going to be higher. The situation reflected in the case scenario may not constitute a threat to independence of the auditor. Irrespective of this, detection risk in the engagement is high. Yes, detection risk in the engagement is high here. So this is going to be the correct option. Option D is going to be the correct option. Clear? Next one. Let us come to the second question. CAD has included, just a moment. CAD has included in the audit plan certain procedures in respect of PPE items. Which of the following audit procedure included in the audit plan is not likely to be relevant? That we have already found out when reading the question. So out of 4 steps, one is inappropriate, verifying cost of PPE items acquired during the year with the purchase bills. So that is the inappropriate, that is the irrelevant procedure. So option is going to be this, verifying cost of PPE items acquired during the year with purchase bills. This is not the most appropriate audit procedure. Next one. Which of the following statements is likely to be most suitable to explain the fact relevant to variation in the gross profit ratio? Like we have calculated the gross profit ratio, we came to know that last year gross profit was 25% and in the current year the gross profit was 20%. That means in the current year there is a fall in the gross profit margin. You tell me what could be the reason for the fall in the gross profit. Let us talk about genuine reasons. What could be the reason? What could be the genuine reason for fall in the gross profit? Either sale price should have come down. Either you might have reduced your selling price. So because of reduction in the selling price, yes, gross profit percentage will fall. Or cost of raw material might have gone up. Cost might have gone up. That might be the reason gross profit percentage might have come down. So if the gross profit is coming down, what could be the reason? Either selling price have come down, or cost of raw material has come down, or inventory has been understated, or inventory should have been understated. So if the inventory is understated, that also could have an impact on the gross profit margin. If the inventory is understated, that also could have an impact on the gross profit. Closing stock, if you try to understate it, that also could be a reason for gross profit reduction. So let us try to understand what could be the appropriate reason. Option A, gross profit ratio has decreased in the year 2022-23. Yes, it has decreased as compared to the year 2021-22. It may be due to the reasons that sale prices may have been reduced by the company to procure more orders. Yes, when the sale price has come down, obviously it is going to have an impact on the gross profit percentage. Okay, this looks like a suitable option. Second option, gross profit has increased. No, gross profit ratio has decreased here, not increased. This option is completely irrelevant. I'm not reading any further. Gross profit ratio has decreased in the year 2020-23 as compared to the year 21-22. It may be due to the reason that office staff salary. See, office staff salary will not be considered in calculating gross profit. It is an indirect expense. This is an indirect expense. Only direct expenses will be considered for the purpose of calculation of the gross profit. So it is decreased, agreed, but office staff salary could not be the reason. Why? Because that is an indirect expenses which will not have any impact on gross profit percentage. Next, gross profit ratio has decreased in the year 2023 as compared to the year 21-22. It may be due to the reason that company has not made an allowance for inventories. Company has not made an allowance for obsolescence in inventories. See, if the company did not make a provision for bad inventories, inventory value is higher. When inventory value is higher, gross profit percentage will increase. It will not decrease. See, when the company has not made a provision for obsolescence in respect of inventories, that means inventory value is higher. If inventory is stated at higher amount, gross profit will increase. But in the given case, gross profit decreased. No. So even this option also doesn't sound apt here. So what is the only option which is correct? Option A is the correct option here. Next one. CAD has also studied purchases and sales of the day, purchase and sales data of the company during the year, and also compared such data with the preceding year and earlier years also. That means auditor has taken purchases, that whatever purchase for the current year is there, that he compared with the previous years, either current year or either immediately preceding year or more previous years. He has taken the sales data for the current year. That sales data he compared with the previous year's sales data. So which technique of substantive analytical procedure he is performing? Is he performing trend analysis? Yes. Generally, what will happen in the trend analysis? See, there are 4 methods, right? 4 methods for performing substantive analytical procedures. What are they? Trend analysis, ratio analysis, structural modeling, reasonableness test. See, in case of trend analysis, what we do, we take one item, we try to study over the period of, we try to compare it with the 1 or more previous years to see whether it is moving in line with the trend or not. So if you see here, this is what auditor is doing. He took the purchase data, compared that purchase data with the earlier years. He took the sales data, compared that data with the earlier years. So he's doing what? Trend analysis. Sir, what will happen in the ratio analysis? In the ratio analysis, we study the relationship between 2 items. Nowhere he said he's studying the relationship between 2 items. He's just comparing with the previous years. So it is not a ratio analysis. Is it structural modeling? See, structural modeling means using of some statistical softwares. They did not say anywhere he's using statistical softwares. Sir, what is reasonableness test? Reasonableness test means you take one financial item, study its relationship with non-financial item of the same year. Here we are not studying any relationship between financial and non-financial item. So what is the suitable one here? Auditor is doing trend analysis here. So which analysis he is using? Trend analysis is performing. So option B is the correct option. Next one. Considering the case scenario in totality, identify which of the following combination of standards is not proper for the likely relevance in performing and completing the above engagement. So they are telling in the given case which standards are not. They have given the combination here. They are asking you to identify which combination is not relevant. That means in the given below options, they have combined some standards in that a few standards are not relevant. If few standards are not relevant for the given audit, we have to find it out. So if you pay close attention, in the given case, in the first paragraph only I have told, the company is not having related parties, SA 550 is not relevant. So no, here SA 550 is not at all relevant for the audit. Why it is not relevant for the audit? There are no related parties only. And one more thing, in this case, the company did not make an appointment of internal auditor. See, if internal audit function itself is not there, there is no question of using the work of internal auditors only. If the internal audit department itself is not there in the organization, will there be any chance of using of the work of internal audit function? No. If there is no chance of using of the work of the internal audit function, SA 610 also will be inappropriate. So these are two standards. Depending on the facts, whatever they have given in the case scenario, SA 550 will become irrelevant, SA 610 also will become irrelevant. So let us see the options now. So if we start looking at the options, SQC1, will it be applicable? Yes, SQC1 will be applicable for all kinds of engagements to maintain quality control. SA 220 talks about how to maintain quality control in the case of audit engagements. Yes, that is also applicable. 501, obtaining audit evidence regarding inventory and also litigations and claims, and also about segment reporting. So SA 501 is also applicable. So we have to obtain audit evidence. It is talking about audit evidence. SA 505, external confirmation. Yes, they are having trade receivables and all. For that we can get external confirmation also. Okay, so this option is all the standards are relevant. If you come to the B option, SA 550 not relevant, 510 is relevant, 220 is relevant, 610 is also not relevant. So they are only asking for which is not proper combination. No, so this is the not proper combination. Next one, 700, forming an opinion relevant for every audit. 510 initial audit engagements. In the given question, they have told in the given case auditor has accepted the audit for the first time. SA 510 also will become relevant here. 220 quality control relevant, 500 audit evidence relevant. So all the standards are relevant. Next option, SQC1 700, both the standards are relevant for every audit. So which one is not relevant? 550 and 610 are not relevant, which is there in the second option. So option B is going to be the correct option. Able to understand? So that's why I told in this RTP, case scenarios are very interesting here. This is how you need to analyze the facts of the question. Got it, guys? Everybody able to understand? So now let us come to case scenario number 2. So we are done with case scenario number 1. We will try to understand the MCQs from second case study. So what does that second case study say? CAM Raja has accepted offer of appointment of auditor of an entity. Okay. As business carried on by the entity is new to him, he wants to gain an understanding about the entity and its environment and its internal control. Nothing but he wants to perform risk assessment procedures. Okay. In this regard, he has performed procedures to obtain audit evidence about design and implementation of relevant controls. Nothing but he performed test of controls. He had performed various procedures like inquiry, inspection, observation also. That means he has performed even substantive audit procedures. Very good. Next. He wants reasonable assurance that accounting system is adequate and that all accounting information which should be recorded has in fact been recorded. So he wants to make sure that accounting software, whatever they are using, that is adequate, and whatever information that is required to be recorded, he wants to make sure that all that expense has been recorded in the books of accounts. Next one. Further, during the course of audit, he has noticed as under, now they are telling some observations whatever he had. As required by the management, bank reconciliation is required to be performed monthly. So management has set a policy that they will prepare a BRS every month. However, the same is not carried out as stipulated due to time constraint faced by the accountant. So management told every month you have to prepare the BRS, but accountant is telling I don't have time, I will not prepare every month BRS. So he did not prepare it. The entity has a system of procuring its raw material supplies on the basis of valid purchase orders issued by the entity. However, purchase orders are not serially numbered. So the company is not having purchase orders which are serially numbered. So there is no serial numbering of purchase orders. Wage sheets are not verified by the responsible official as required by the management. So before you make the payment of the wages, wage sheet will be prepared. Wage sheet means nothing but which contains the amount of wages which are required to be paid to the laborers. So before making payment, that wage sheet should have been verified, but that verification is also not happening. Next one. Staff of the entity is responsible for bringing cash from centers in the nearby areas to the entity's premises from where it is deposited into entity's bank account. So generally this company is having centers at different locations. A person will go collect all the cash, he will bring it to the entity, and from there he will go and deposit it in the bank account. However, concerned officer has not renewed insurance for cash in transit. See, generally for cash in transit, insurance will be there. If at all the cash is stolen on the way, you can claim the insurance compensation for that. But in this case, what happened is that they have cash in transit policy, but they have not renewed it. It got expired. So if you pay close attention, all these are lapses of the internal controls. All these are what? There are deficiencies in the internal control. And if you pay close attention, these deficiencies are of such a nature that which require the managements, which require not just management, which require those charged with governance attention. Major deficiencies, no, like they're not preparing the BRS on time, purchase orders are not getting serially numbered, there is no there is a cash in transit insurance is not getting renewed, and even wage sheets before making the payment, they are also not getting verified. So if you see here, all these are deficiencies, and even they're significant deficiencies if you pay close observation. Now on the basis of that, they're asking us to answer the few questions. What are they? The auditor has performed procedures to obtain audit evidence about design and implementation of controls. Which of the following procedures is more reliable to obtain audit evidence relating to application of control? That means whether the control is actually functioning properly or not. Application of control, see here, whether control is actually getting performed. You want to know whether control is actually working or not, which is the most reliable way. So if you want to know whether control is actually working or not, you have to go and observe when the control is getting performed. When the control is getting executed, when you go and observe the actual application of the internal control, that will give you best evidence, no? So let us see the options. Number one, observing application of control. Yes, this will give you best evidence. Inspecting documents. See, when you want to actually know the application, you have to go and observe it. By inspecting the documents, you will not get evidence regarding application. Next one, inquiry. Even inquiry also you can get evidence, but you will not get to know how it is getting actually implemented. Studying design. Even if you study the design also, see, this is something which we do before or after the control is getting executed. When you actually want to know whether the control is working effectively or not, you have to go and observe it. When it is actually getting executed, you have to go and observe. When you go and look when the control is getting performed, that will give you best evidence, no? Inspection, inquiry, studying, this all we do outside of the application of internal control. When control is not working, we are studying this, like we are reading the documents, we are doing the inquiry, we are doing the studying, that, but we are not actually observing when the control is actually taking place. So out of the above four methods, which one will give the best reliable evidence regarding application of control? Observation. Next one, examination and evaluation of internal controls is indispensable for CAM. So that means whatever examination and evaluation of internal controls he has to do, that is unavoidable for this auditor. It provides him necessary comfort relating to completeness of accounting information. So if you verify internal controls, you will get that comfort zone whether the controls are working effectively or not. However, review of internal controls entity will not enable him to know. By verifying internal controls, what you will not be able to do, that we have to find out. So option A, whether errors or frauds are likely to be located in the ordinary course of business of operations. That means if you study internal control system, you will come to know as a part of business operations whether frauds and errors are getting automatically recognized or not. Like you take, for example, we have a concept called internal check, segregation of duties. If there are proper segregation of duties, if work performed by one person is automatically verified by another person, then there are high chances of mistake. Then there are high chances that frauds and errors will be detected in the organization only, even before audit. So if you study internal control system, you will come to know, yes, errors and frauds are likely to be identified in the course of business of the operations. That you will get to know it. Yes, but they're asking you what you will not be able to find it out. But first one, you will be able to find it out. We'll come to know whether errors and frauds are getting located or not. Whether an effective internal audit department is operating, yes, this also will come to know. If we study internal controls, if we came to know that controls are all effective, then we will form a conclusion that yes, in this organization, internal audit department is working effectively. If I came to know that internal controls are not working effectively, but there is an internal audit department in the organization which clearly indicates that internal auditors are not working effectively, that's why so many weaknesses are there in the internal control system. Next one, whether his opinion needs modification. This you will not find it out. Why? Because by verifying internal controls, you will only come to know whether the controls are effective or not. And why we basically verify internal control is to design and perform the substantive audit procedures. After performing substantive audit procedures, you will come to know whether modification of the opinion is required or not. Simply by performing test of control, simply by verifying internal controls, you will not be able to understand, you will not be able to form an opinion just by verifying internal controls. You can express an opinion only after performing substantive audit procedures. Only after performing what? Substantive audit procedures. So this he will not be able to find it out. And in fact, in the question, they are asking us to find out which one you can't do by performing test of controls. I can't do expression of opinion. So whether any administrative control has bearing on his work. Yes, you will come to know about administrative controls also. But out of the 4 options, the question is, by testing the controls, which one you will not be able to do? You will not be able to decide whether opinion needs any modification. Clear? Next one. Let us come to 2.3. As regards weakness identified by the auditor in control system, which of the following represent significant deficiencies? So if you see here, all the control deficiencies lead to significant deficiencies, like not performing bank reconciliation, lack of proper sequence in purchase orders, not verifying cash sheet, not having insurance. Everything is a significant deficiency. So all are significant deficiencies. Next one. Which of the following is most appropriate regarding auditor's responsibility in accordance with SA 265? See, SA 265 talks about communicating deficiencies to the management and those charged with governance. So what you have to communicate regarding SA 265? We need to find out the most appropriate statement. So as an auditor, you are required to communicate significant deficiencies in the internal control to the management. Not to the management, you are required to communicate with those charged with governance also. So this option is wrong. To communicate significant deficiencies in the internal control along with explanation of their potential effects to the management, not just management. If it is significant deficiency, you have to communicate with those charged with governance also. To communicate significant deficiencies in the internal control along with explanation of their potential effect, and also to provide sufficient information to understand the context of the communication to the management. Till here everything is correct. You have to communicate deficiencies, you have to tell what is their impact, you have to tell also sufficient information which will make them understand that reporting in a much better way. And here it is wrong. So what they are telling, and also you have to express an opinion on the effectiveness of internal control. This is nowhere expected from the auditor. So as an auditor, you are required to express an opinion only on the financial statements. You are nowhere required to express an opinion on effectiveness of the internal control. So till here it is correct, but the last thing is not a part of auditor's responsibility. So that's why this option is also wrong. Now, if you read the last option, to communicate significant deficiencies in the internal control along with explanation of their potential effects and also provide sufficient information to understand the context of the communication to the management. Yes, this is the correct one. Able to understand? So this is the correct option. Option D is going to be the correct option, not option C. Option C is half correct, the other half is wrong actually. Okay, next one. General MCQs. Now there are some general MCQs, not case scenario based. Let us have a look at them also. CA Muskan is auditor of 2 concerns, Wellstar Homes and Wellstar Stores. The partners in both the firms are common. She is conducting audit of 2 firms, Wellstar Homes and Wellstar Stores. Both are having common partners, both are related entities. While auditing financial statements of Wellstar Homes, she has noticed that few expenditure bills pertaining to Wellstar Stores have been entered in its books. That means whatever expenditure that is related to other entity, it has been recorded in this entity. So the entity which doesn't belong to your client, which did not occur in your client's business, that has been recorded in your client's books. Which assertion of Wellstar Homes is disproved? So which assertion is violated here? See, when it comes to P&L items, what assertions will be there? They're talking about expenditure. When it comes to P&L items, what assertions will be there? Occurrence will be there. Completeness will be there. Cut-off will be there. Measurement will be there. These 4 are the major assertions, right? What do you mean by occurrence? Whatever expenditure that has been recognized in the books of accounts, that should have actually occurred, that should have actually taken place, and that should have occurred in the business of the client. That is occurrence. Completeness. No expense should have been missed out. All the expenses should have been recorded. That is completeness. Cut-off. Expenses should relate to the current financial year. That is cut-off. Measurement. Expenditure has been shown at correct amount. So you tell me expenditure belonging to others has been recorded in your client's books. That means whatever expenditure that has been recorded in the client's books, that doesn't occur in the business of the client. So which assertion was disproved? Occurrence was disproved here. Not completeness, not cut-off, not measurement. What has been disproved here? Occurrence has been disproved here. So where is occurrence here? Yes, occurrence has been disproved. Next one. CAX is nearing completion of audit procedures during the course of the audit of a company. He has found nothing unusual till now. The company is earning handsome profits since last many years and there is a little debt burden on it. So the company is making good profits. They also doesn't have major debt. They have a little amount of debt. It is also in the process of expanding its business by taking a loan from the bank. The bank has given approval also. The bank has also granted in principle approval for leading to money to the company. Which of the following statements is most appropriate in evaluation of going concern assumption followed by the management? See, if you pay the attention, so many good things are there regarding the company. The company is making decent profits. The company is having very little debt. The banks are also ready to give the loan. What does that indicate? That indicates that there are no events or conditions which cast a doubt regarding going concern. Yes or no? There is no risk of material misstatement regarding going concern. Why? Because they told company is making good profits, they're having very little debt, bankers are also ready to give the loan. So it is clearly indicating that there are no events or conditions which which cast a doubt regarding going concern. So if there are no events or conditions which cast a doubt regarding going concern, that means going concern is valid, and you can come to that conclusion only by performing risk assessment procedures. You need not perform substantive audit procedures. If you pay close attention, when we discussed SA 570, I divided audit procedures regarding going concern into two categories. One is you will perform risk assessment procedures, and the other one is substantive audit procedures. Risk assessment procedures always we perform. We try to identify whether there are any events or conditions which cast a doubt regarding going concern. And in case if I am unable to find any events or conditions which cast a doubt regarding going concern, I can conclude that going concern is valid, no need to perform that further audit procedures. However, in case if I perform risk assessment procedure, I am able to identify an event or circumstance which cast a doubt regarding going concern, then I will perform further audit procedures. In the given case, there are no events or conditions which cast a doubt regarding going concern, so I can decide going concern is valid and no need to perform further audit procedures, no need to perform in-depth audit procedures. Clear? So this is what we have learned in SA 570. Now out of this explanation, they are asking us to answer some questions. Let us see. Appointment of management's assessment in relation to appropriateness of management's assumption in relation to going concern made by the auditor may be made by the auditor without performing detailed evaluation procedures. Yes, so you can decide that whatever assessment management has done regarding going concern, that you can evaluate, but no need to perform detailed evaluation procedure, no need to perform further audit procedures. Why you no need to perform further audit procedures? Why? Because there are no events or conditions which cast a doubt regarding going concern. So you can evaluate whether the management's going concern assumption is valid or not, but no need to perform in-depth audit procedures. Yes, this option sounds good. Appropriateness of management's assessment in relating to going concern assumption would be made by the auditor by performing detailed evaluation procedures. No, detailed audit procedures are not required. Just if you perform risk assessment procedures, that will be enough. Appropriateness of going concern assumption would be made by the auditor directly skipping management's assessment. No, you should compulsorily do management's assessment. Whether management made the going concern valid or not, that you have to compulsorily do. You can never skip management's assessment. You can skip further audit procedures, but you cannot skip management's assessment. Evaluating the management's assessment, that you cannot skip it. Appropriateness of going concern assumption would be made by the auditor by necessarily examining cash flow forecast. See, examining the cash flow forecast is one of the further audit procedures only. I am telling you here, further audit procedures itself is not required. So that's why which option sounds fit here? Option A sounds very much fit here. Next one. CA Piyush is offered appointment as statutory auditor of a branch of a bank. He has also taken a housing loan of 75 lakhs from the same bank. Identify threat. The auditor has given a loan to the company. The auditor has taken a loan from the company. He is having some financial interest. What kind of threat it is? Self-interest threat. Straight away question. A chartered accountant finds during the course of statutory audit of a company that management is not serious about findings of the internal audit reports. No action has been taken on the findings of the internal auditor reports for the last 2 quarters are gathering dust. So internal auditor has given some observations, but management is not at all taking any actions. He has further found that management has not disclosed information relating to transactions with another company. So management is also not providing you with the required information. However, he has assiduously gathered that it is a related party by going, assiduously means he has did a in-depth analysis and gathered that it is a related party by going through annual reports of the past years, and he has even searched the online database on a MCA portal. Just because management is not providing information, he did not stop there to get the information. What he has done is he went through the MCA portal and found out the details. He went through MCA portal and found the details. That means what he is doing. So we have to find out the options. Let us read the options. Is he doing objectivity? See, objectivity doesn't have anything here. Objectivity means what? Able to take the decision in an unbiased manner. That we call it as objectivity. Yes or no? So it is nowhere related to the given question they are asking. Coming to the next option, they are telling professional knowledge. See, this term professional knowledge we have nowhere seen in the entire auditing subject. So the terms what we have heard is, we have heard five ethical requirements: objectivity, independence, integrity, professional competence and due care, professional behavior. We have also seen professional skepticism, professional judgment we have seen. But in the given case, he is not using any of the standards and all, just he is going through the databases in a skeptical manner. That means he is having a suspicion. To find out that suspicion, he went through the MCA portals and all. So that means what? He had a questioning mind. He is having a professional skepticism here actually. They are using the term professional knowledge, but this term professional knowledge nowhere we have come across. What do you mean by using professional knowledge, using the standards on audit, using the content from the guidelines given by the ICA? If you do that, that is a professional knowledge. But here, if you see here, management did not disclose the information, but he did not stop there. He thought, okay, if I could go to the MCA portal, will I get any extra information? He thought it and performed it. That means he was skeptical here. He was a professional. He had the professional skepticism. Or if I put it in other way around, when he come across unusual circumstances, he come across unusual circumstance of management not providing information, and he remained alert to it. That also you can say. So if you go by that thing, this is also falling under professional skepticism only. So objectivity is not related, and even professional knowledge is also nowhere related. Independence means ability to take the decisions in an independent manner. That is also not related to the given question. So independence is ability to express the opinion in an independent manner. That is also nowhere related to the given question. Professional skepticism, yes, this is the correct question. So you did not stop when the management did not provide information. You remained skeptical. You maintained that questioning mind. You went to the MCA portal, extracted the information. So you remained skeptical here. So the quality which you have shown here is professional skepticism. Next one. You have been appointed as statutory auditor of a company for the first time. It has become very important for you to understand the company and its environment. Which of the following activities are not expected to be included in your attempts to know about the company and its environment? So in order to understand the company and its environment, you will implement certain steps. They have given some options. From that options, we have to find out which steps are not included in understanding the entity's environment. Gaining a knowledge about debt structure. Yes, we will try to obtain this information. Evaluating whether company's accounting policies are appropriate. Yes, this also will try to obtain regarding company. Understanding business risk faced by the company. Yes, this also is related in the company's environment. Gathering evidence about valuation of trade receivables of the company. See, this is a part of substantive audit procedure, not a risk assessment procedure. This we do after we have obtained an understanding of entity and its environment. So above three things are options relating to company and its environment. The last option is nowhere related to understanding the company and its environment. It is actually related to obtaining evidence regarding the items of the financial statements. It will be a substantive audit procedure, not a risk assessment procedure. So option D is going to be the correct option. They are also asking which is not included in understanding the environment. Option D is not included in understanding the client's environment. Clear? So with this we are done with MCQ part. Now we will do the descriptive part. Descriptive part is not that complicated. Very straightforward questions will be there. We can complete it in a very less amount of time. So let us have a look at the descriptive part now. So if we start discussing the descriptive part, so chapter wise questions are given here. So let us start with chapter number 1, nature, objective and scope of audit. So question number 1, M Motors Limited. See, when it comes to the questions and answers, I will just give references to the respective chapters and overall concept of the question I will explain. So answer you can refer it. M Motors Limited is a leading Indian automobile manufacturer with many offerings across commercial, passenger and electric vehicles. So it is into the manufacturing of vehicles. The company is pioneering India's electric vehicle transition and enjoys considerable advantage in one of the fastest growing automobile markets. They spoke everything about the company. GR and Associates have been appointed as its statutory auditors for the financial year 2022-23. J&K are newly appointed audit assistants in the firm and are a part of engagement team constituted for the purpose of audit of M Motors Limited. Okay, they have appointed an auditor. Next one. In that team, 2 newly appointed article assistants are there. However, they are confused about what such an audit tends to achieve. They perceive audit as a guarantee against possible frauds and errors. Do you agree with that? No. Do you agree with the perception of both the assistants? No. In this context, outline the objectives of an independent audit conducted in accordance with the standards on audit. So they're asking you to write what are the objectives of the audit as per the standards on audit. So you write the objectives of the auditor as per SA 200 and little bit elaborate about that objectives also. Try to explain what is the meaning of reasonable assurance. Try to say that as an auditor, you are since the audit assistants are feeling that audit is a guarantee against possible frauds or errors. It is not. So you elaborate about that misstatement, what is a misstatement, what is fraud, what is error, and you say that you need to obtain only reasonable assurance whether the financial statements are free from material misstatements. Reasonable assurance is a high level of assurance, but it is not a guarantee. So as an auditor, you cannot give guarantee about non-existence of frauds and errors. So the same way they have presented the answer. First, you have to write the objectives of SA 200, elaborate that term reasonable assurance, elaborate that you are only obtaining reasonable assurance regarding material misstatement. Reasonable assurance is a high level of assurance, but not a guarantee. And then finally write the conclusion. Audit assistants are wrong here because Audit is not a guarantee against frauds and errors. So that you have to elaborate. You can refer the suggested answer for detailed presentation. Next one. Standards on auditing apply in audit of historical financial information, whereas standards on review engagements apply in review of historical financial information. Explain in detail, giving examples. Straightforward question. They are asking you to write the differences between SA and SRE. SA apply when you are conducting audit of historical financial information. SRE will become applicable whenever you are conducting review of historical information. Standard audit is a reasonable assurance engagement. Review is a limited assurance engagement. And along with that, you can also define what is the meaning of historical financial information. That also you can define. And they're also asking you to give examples, give a few examples of the standards on audit, give a few examples of standards on review engagements. Two examples they're asking. Give 2 examples of the standards on audit, give 2 examples of standards on review engagements. You can refer to the answer. Right. Coming to the next chapter, audit strategy, planning and program. Let us see what they're asking. Preliminary engagement activities include certain activities to be performed by the auditor while planning an audit. Discuss such activities briefly. How performing such activities will assist the auditor. So they are asking you to write what will be included in the preliminary engagement activities. So we know 4 activities will be included. Performing procedures before acceptance and continuation of client relationship, evaluating the compliance with the ethical requirements, understanding the terms of the engagement by way of engagement letter, and even communication with the predecessor auditor. All these 4 activities will form part of preliminary engagement activities. If you perform preliminary engagement activities, how it will assist you? If you perform preliminary engagement activities, you will get to know information about entity, environment, and its internal control, and you can do the planning in a much better manner. Yes or no? That's it. This is what you are supposed to write. Next one. The assistant of CAK is assigned responsibility of drafting audit program relating to purchases appearing in the financial statements of the Broad Industries, a partnership firm. The said firm is a GST registered taxpayer and is engaged in the manufacturing of packaging boxes from a special type of paper taxable under GST. Help him by drafting a sample audit program. So this is a question. This is a practical question. This question specifically you have to refer. Very, very important. This question you have to specifically refer to the answer. Why? Because this is a practical question. So they gave details about the company and they want you to develop a audit program for the purchases. They gave details regarding purchases also, like the company is a GST registered firm. It is engaged in the manufacturing of packing boxes from a special type of paper, which is taxable under GST. So they are registered person, they pay GST on their purchases. So if you are an auditor, how you will plan the audit program? So as we know, audit program should contain details of instructions or audit procedures which are required to be performed for the given area. So what kind of audit program should be developed for the purchases in the given case? So they have given a format here. You have to tell name of the concern, for which client you are doing the audit, for which financially you are doing the audit, who prepared this audit program, and who reviewed this audit program, who approved this audit program. And then you have to write the list of procedures also, like watch few purchase invoice of paper from purchase records of the concern. What is the extent of checking? So who is doing, how much checking you are doing? For example, are you checking 50%, 10%, 20%? So what is the extent? Nothing but what is the sample size? What is the basis for sample? Did you follow statistical approach or non-statistical approach? If yes, which method you are following? Done by whom? Who done this audit procedure? Next, another procedure. Trace these invoices into account books. Whatever invoices are there, that you have to trace whether they are into books of accounts or not. How much extent of checking you have done? Did you do 10%, 20%, 30%? What is the basis for your sample? Who did it? Verify few purchase invoice of paper on GST portal. Take a few purchase invoice and cross verify on the GST portal. How many transactions you will verify? What will be basis your sample? Who done it? Trace few purchase invoice of paper in stock records to ensure that these have been added to the stock of raw materials. So whatever purchase you have made, whether that is getting added in the stock or not, that also you have to verify. What is the extent of checking? What will be the basis of sample? Who done it? Simple. So this is one of the practical example. You have to refer this, guys. I'm telling you, please refer this question and then only go for the examination. So once again, they might ask you in the main exam, write about what is the audit program for sales. That also they might ask you. If they ask you what are the program for sales, more or less similar some conversions you can do and reproduce the answer. Like what you can say, like for example, you can say verify few sale invoices of paper from sale records of the concern. Trace these invoices to the entries in the books of accounts. Verify sale invoices on GST portal. Verify sales invoices of paper in stock to ensure that the sale, when whatever items have been sold, they are taken out of the stock. Even stock records are also updated because of sales or not. So like this, even if they ask you write an audit program for sales, just you can replace that purchase invoice and you have to apply some concept also there, some logic also you have applied, and you can write this kind of audit program. So very, very important. Please be cautious about this kind of questions. Next one. Coming to the next question. Next one, risk assessment and internal control. Let us see. Satranga Foods Private Limited is engaged in manufacturing of pickles. The auditors of the company have planned audit procedures in respect of recognition of revenue of the company. Despite that, there is a possibility that misstatements in the revenue recognition are not identified by planned audit procedures. Whatever audit procedures you have performed, they might not be able to identify the misstatements. The procedures performed by the auditor may not be able to detect a misstatement. What risk it is? It is a detection risk. Identify and explain that particular risk in detail. They are asking you to elaborate. They are asking you to explain this detection risk in a detailed manner. So you are required to write the meaning of the detection risk, elaborate that detection risk. And if you look at the answer, they say that detection risk will arise from either sampling risk also, it could also arise from non-sampling risk. That means you might not be able to identify a misstatement because of selection of wrong sampling. Sometimes you might not be able to identify a misstatement because of wrong application of audit procedures. Detection risk means the risk of not identifying misstatement. And this detection risk might arise because of sampling risk, or it could arise because of non-sampling risk. You might not be able to identify a misstatement because you have selected a wrong sample. Sometimes you select a correct sample only, but still you will not be able to find out misstatement because of your wrong procedures, wrong analysis, wrong conclusion. That is a non-sampling risk. So this paragraph also you have to add. Nothing but if the question gets tested for 4 marks, you can't just write the meaning of the detection risk. No. In the book, detection risk will be only 1 paragraph. Only 3 lines of definition will be there. That much if you write, you will not get 4 marks. So you have to elaborate that answer. Sir, how to elaborate that answer? Refer to the suggested answer once. Next one. IT related risk can have an impact on the audit. In what different ways such risk can have an impact on the audit of the financial statements? Nothing but impact of IT on audit, impact of IT risk on audit. This is a question from audit in an automated environment. So you might have seen in the audit in an automated environment, if the risk of IT are not mitigated, they will have an impact on the compliance procedures also. They will have an impact on the test of details also. They will even have an impact on the reporting also. So that 3 paragraphs will be there, which you are required to reproduce it. Next one. CA Kanika audited books of accounts of Engineering Limited for the financial year 2022-23. The auditor used an audit procedure according to which all documents and records maintained by the company were checked in detail to obtain audit evidence. Explain the audit procedure used by the auditor. If you are verifying the supporting documents, what audit procedure it is? You are doing inspection. Comment on the reliability of audit evidence obtained by performing such an audit procedure in some cases. So generally, whatever evidence you obtain by inspection, that will be reliable only. But in some cases, inspection will not give you complete evidence. In some cases, inspection will not give you complete evidence. Like for example, if you want to know fixed assets, for example, company is having land and building. You want to know company is a true owner of the land and building or not. Here what you can do is you can inspect the title documents. By inspecting the title documents, you will come to know whether really the company is the owner of that land and building or not. But you will not come to know whether this land and building is really existing or not. For that, you have to go into the physical verification. So inspection will provide audit evidence regarding valuation. Inspection will provide audit evidence regarding completeness. Inspection might provide audit evidence regarding rights and obligations. But in some cases, if you want to obtain audit evidence regarding existence, occurrence, their only inspection will not give you audit evidence. You have to go and do observation also. Clear? So that they have elaborated in the answer, some general discussion they have given. Please refer to the answer also once. With this background understanding, refer to the answer once. Next one. CAJ is conducting statutory audit of Gemini Limited engaged in the manufacturing of pharma products. Okay. The company is fairly large one and has a well-functioning internal audit department. While considering sending out external confirmation request to trade receivables outstanding as on the date of financial statements, CAJ has delegated the process of choosing the trade receivables, designing the request, and receiving the responses from customers to internal audit department. That means you allocated some work to internal auditors under direct assistance. The responses are also received on the mail ID of the internal audit department. Is the approach of CAJ proper? See, what is the meaning of external confirmation? Direct written response obtained by the auditor from a third party. In the given case, what statutory auditor is doing is he allocated the work of external confirmation to the internal auditor, and even he is asking the third party to respond back to the internal auditor's email address. You tell me here where external auditor is receiving a direct response. The meaning of external confirmation is the auditor receiving a direct response from a third party. But you tell me in the given case, is the external auditor receiving a direct response? No, it is received by internal auditor. So do you think if you allocate all the work relating to external confirmation, is that correct? No. So that is not correct. So here in the given case, the external auditor is not complying with SA 505. So if you look at the suggested answer, they will give the suggested answer. See, this is actually a combination of SA 505 and SA 610. Both the standards have been combined here. So if you look at the answer, they will give an answer something like this. Yes, so see here, first they told what should be the steps if you want to send external confirmation. So the steps are, first you have to determine the information which you want to get the confirmation, select the appropriate confirming party, design the confirmation request, then you finally send it and do the follow-up. These are the steps involved in external confirmation. However, in the given case, it appears that external auditor has delegated entire work of sending out external confirmation request to internal audit department, over which he has no control. Further, responses to external confirmation requests are received on the mail IDs of the internal audit department. All these acts are not in line with requirements of SA 505. So he did not he did not send and got the responses to the external confirmation as per SA 505. Nothing but the approach followed by the external auditor is improper here. Next. The newly appointed auditor of BTN Limited wants to obtain sufficient and appropriate audit evidence about whether opening balances contain a misstatement that materially affect the current period financial statements. They are talking about opening balances. Which standard should strike your mind? SA 510. And what is the question asked? What audit procedure should he perform for this purpose? In order to obtain audit evidence regarding opening balances, what you should do? So if you refer SA 510, in that audit procedures paragraph will be there. That audit procedures paragraph, you have to write it here. Straight away question. Next one. SPR Limited has been into the media business since 2001. During the financial year 2020-23, many notices were received by the company for hurting the public sentiments and financial claims. Guys, if you follow my material, same question will be there in the test your knowledge questions. Same question will be there in the main material itself. I have given same question, similar kind of question, exact question if I am not wrong. Same question will be there. Okay, so the material has actually been closed, but whatever it is, I will read it once again. Same question will be there in my material, but still I will read it. SPR Limited has been into media business since 2001. During the financial year 2022-23, many notices were received by the company for hurting public sentiments, and the financial claims were also filed against the company. That means so many people have filed the cases against the company. As an auditor of the company, you requested the management for arranging a meeting with the company's external legal counsel. You wanted to meet the entity's external legal counsel. The moment you read this term, auditor wanting to meet with the entity's external legal counsel, auditor is trying to obtain evidence regarding litigations and claims. Which is standard talking about auditors' evidence regarding litigations and claims, SA 501. So SA 500, now SA 501 should come to your mind. So now if you come to the specific issue of the question, auditor wants to meet the entity's external legal counsel. But management is of the view that such meeting with the external legal counsel are necessary only in certain circumstances. Can you list down such circumstances? So what are the circumstances in which generally external legal counsel auditor is required to meet with the entity's external legal counsel? In what kind? Generally, if you want to communicate with the entity's external legal counsel, you will do it through a letter of inquiry. But in some circumstances, just communicating with the letter of inquiry alone will not be enough. As an auditor, you might feel that it will be appropriate if you go and meet the entity's external legal counsel directly. In what circumstances, sir? In 3 circumstances. When the matter is a significant risk, when the matter is very difficult to understand, and whatever management told, whatever external legal counsel told, both are not matching, then you might feel appropriate to go and visit that entity's external legal counsel. So this was very important question in the old attempt, in the old syllabus also they have asked this question numerous times. So very important. So refer SA 501. Next one. Proceedings have been initiated against Falls Limited for holding Benami property under law relating to the prohibition of Benami transactions and the rules made thereunder. But such property is not recorded in the books of accounts. As a consultant to the company, what will you advise the company as far as disclosure requirements in the financial statements? See, the moment they read Benami, the moment student read Benami transactions, no, immediately he will go to Caro 2020 will come to his mind. No, they are not asking about auditors reporting requirements. They are asking you what disclosure requirements management is required to follow. They are not asking you auditors reporting requirements regarding Benami transactions. They are asking you what disclosures management is required to give in the financial statements regarding the Benami transactions. So this we have already understood in the class. In the marathon also I have covered this part. This is going to be very important. You have to refer it. Even in the summary notes also I have added these disclosures. Very important, guys. See, you are able to find this question in the RTPs also. Like if you see here, these are the disclosures which are required to be given by the company regarding Benami properties, details of such property, year of acquisition, what is the amount thereof, who are the beneficiaries. If property is not in the books of accounts, then the fact shall be stated. And then they say when there are proceedings against the company under this law, you have to refer, you have to mention, then the details shall be provided. What kind of proceedings are there? What is the status of that? What is the company's view on the same? So all these things you are required to give disclosure. So this is very important. Read the question carefully. Don't write auditors reporting requirements when they are asking about management disclosures. Read the question carefully. This you will confuse in the this you will confuse regarding Benami properties, and one more place you will confuse CSR activities. Sometimes they will ask you a question to write about what are the disclosure requirements regarding the company relating to CSR activities, but you will write Caro reporting requirements regarding CSR activities. That is also one confusion which most of the students will have. Next one. One more question. Right. Droma Shoes Private Limited was established in the year 2022-23 for manufacturing of footwear. As funds were needed to carry on its business activities for purchase of different raw materials, incurring of regular expenses like power and fuel, payment of wages, etc., it has got sanctioned a credit facility amounting to 2 crore rupees, repayable on demand from a bank against a primary security of its current assets and collateral security of residential house. The company has got loan for what purpose? For the purpose of its working capital requirements, for the purpose of getting the loan, for the purpose of buying the raw material, for the purpose of meeting the expenses. So whatever this loan they have got, whatever credit facility they have got, that is a working capital loan. Generally, working capital loans will be given in the name of overdraft facility or cash credit facility. So the company has taken a working capital loan that is either in the form of cash credit or overdraft facility. And for this loan, they have given what as a security? They have offered current assets as a security, and also they have given collateral as property of one of the director. Duly signed guarantee document by directors in favor of bank also form part of bank's loan documentation. That means directors even give a guarantee for this loan also. Account statement of the above facility downloaded from the bank's website show a debit balance of 1.85 crores as on 31st of March. For bank, if it is a debit balance, that will be a credit balance to your client. That means company is having an outstanding amount of 1.85 crores. The operations in the above credit facility are satisfactory. In this regard, identify nomenclature. Nomenclature means name. Identify name of such credit facility given by the bank. What is the name? It will be either a OD facility or cash credit facility. How would above amount of 1.85 crores be reflected and classified in the financial statements? How you will show it? You will show it as a current liability. Yes or no, it is a current liability. You have to show it as a current liability as on 31st of March 2023. Also state specific disclosure requirements of Schedule 3 of Companies Act 2013. And with regard to these loans, what disclosure requirements you have to give? Once again, they are not asking about auditors reporting requirements. They are asking you disclosure requirements relating to the loans. So what disclosures you are required to give? This is also from the chapter Audit of Items of the Financial Statements. So if you have a look at the answer, these are the disclosure requirements. So you have to disclose nature of the security, what kind of asset you have given it as security. So primary security is current assets, collateral security is residential house. And also, as loans have been guaranteed by directors, aggregate amount of such loan also you have to disclose. Additional disclosures like, since you have taken the loan on the basis of current assets, you have to disclose whatever quarterly statements you have submitted with the banker regarding the current assets, whether they are matching with the books of accounts. If not, summary of reconciliation. If not, what are the discrepancies? What is the difference between statements submitted to the banker and the actual books of accounts? So these are the disclosures which are required to be given by the company in their financial statements regarding the loans. Clear? So refer to this answer once again specifically. I have explained it in a overall gist, but you have to refer that answer in a detailed manner. Very important. This question is also very important. Please do mark it, refer, and go for the examination. So I'm marking it here. So very, very important. Do mark it. Next. Following is the extract of notes to accounts of the financial statements of STU Private Limited, listing some ratios. Discuss whether disclosure given in the following manner meets the requirement of Schedule 3 of the Companies Act. Ignore other ratios which are not listed. So if you remember, this point also we have covered. This point also we have covered in our audit of items of financial statements, and even in the marathon also I focused a lot on this point. You are required to give certain disclosures. You are required to give certain disclosures regarding what? You are required to give certain disclosures regarding some financial ratios. Sir, what ratios are required to be given? A list has been given. They are asking you to ignore all the ratios. They are asking you to consider 3 ratios. They have disclosed 4 ratios. What are they? Current ratio, inventory turnover ratio, trade receivable turnover ratio, net profit ratio. Now they are asking you, is the disclosure given regarding the ratio is correct or is something missing? So what Schedule 3 says it, when you are disclosing the ratios, you should also disclose what is the denominator, what is the numerator. So here they are only telling the figures. They did not give the disclosure regarding what denominator has been used, what numerator has been used. So they have to even disclose about what is the numerator used, what is the denominator used. And also they say that if there is a discrepancy in the ratios, when you do year on year comparison, if there is 25% or more difference in the ratios, explanation also has to be offered. If the ratio is, if the difference in the ratio is more than 25%, then you have to offer the explanation also. Then you have to highlight that deviation also. Like if you calculate the differences, see here. So if you come to the suggested answer once again, current ratio last year it was 2.3 and in the current year it was 2.5. There is a change of 0.2. So 0.2 divided by 2.3 into 100. That will be the percentage of variation. It is 8.69%. If you calculate that, you will get this figure. Then this year inventory ratio was, last year it was 6, current year it was 3. 50% fall is there. Here it is 50%. Trade receivable turnover ratio, last year it was 5, it was 1.75. Now it is 65% difference is there. Net profit ratio, last year it was 10, current year it is 13, 30% is there. If you see here, in 3 cases, the deviation is more than 25%. This has to be given, this has to be reflected, and explanation also has to be offered why this difference of more than 25% is there. So this is what missing in the disclosure. They did not give what is the denominator, what is the numerator, that they did not give the disclosure. In addition to that, since the deviation is more than 25%, they did not even offer the explanation also. See here how important it is. 3 questions they have asked in the RTP. All the 3 questions have been asked in the RTP from the audit of items of the financial statements. All the 3 questions are related to disclosure requirements only. So it is very, very important to have a look at the disclosure requirements before you go for the examination. Okay, so pick up the study material and look at the disclosure requirements. Next one, audit documentation. Let us see. Rajini, a CA student, has understood that SA 230 requires auditor to prepare audit documentation on a timely basis. While reading about SQC1, she notices that time limit of completion of final audit file is ordinarily not more than 60 days after the date of auditor's report. She finds it to be puzzling, unable to comprehend, unable to understand. She asks your guidance. Explain. Nothing but they're asking you to write about assembly of the final audit file. There will be a question in the audit documentation chapter, assembly of the final audit file, that you have to write it. So assembly has to be completed within 60 days from the date of auditor's report. While assembling the audit file, we will not perform any audit procedures. We will do only administrative work. We will not make any new decisions. So that assembly of audit file, whatever is that paragraph you have to write here. Discuss the meaning of completion memorandum, elaborate upon its importance. So they are asking you to write completion memorandum. Completion memorandum is nothing but other name for audit documentation summary. They are asking you to explain in a detailed manner regarding audit documentation summary or completion memorandum. Both are same. So write about that audit documentation summary. Next, completion and review. See, there will be no separate chapter in our material, completion and review. In completion and review, there will be few standards that we have merged in the standards on auditing chapter only. Now, anyhow, let us see. CAK is a statutory auditor of DEMA Private Limited for the financial year 22-23. The company has 3 plants in India. He is nearing completion of audit procedures relating to the financial statements for the year end under audit and has yet to sign the audit report. That means audit report has not yet been signed. Meanwhile, a huge fire had broke out in one of the plants of the company located near Nashik on 25th of June. After the end of the financial year, after the closure of the financial year, fire accident happened. The moment you read this, subsequent event should strike your mind. So meanwhile, a huge fire had broken out in one of the plants of the company located near Nashik on 25th of June 2023, damaging substantial part of the machinery and work in progress, resulting in a loss of about 5 crores. Unaware of this incident, he is in the process of finalizing his report in first fortnight of July 2023. State few audit procedures to be performed by him to obtain sufficient and appropriate audit evidence for identifying such events. Even if you ignore all the facts also, just if you read the last line also, they're asking you to write what are the auditor's procedures regarding subsequent events, what audit procedures you are required to perform regarding subsequent events, and also explain what will be the responsibilities. So in the given case, audit report is not yet finalized. He came to know about subsequent event. You came to know about event before signing the audit report only. Ask the management to give a disclosure. Why? Because this is a non-adjusting event. Ask the management to give a disclosure and give the audit report. This is your responsibility. But the main question is what audit procedures you have to perform to obtain audit evidence regarding subsequent events. You have to write from SA 560 that paragraph relating to audit procedures. Next one. So if you want me to read that audit procedures, I will read it for you once again. So if I look at the answer once again, I'm very skeptical whether you will refer to all the answers or not before examination. So that's why I'm taking all that load on me. If at all the same question gets tested, I want you all to write the correct answer. See, ultimate aim is simple, guys. You have to pass the examination. That is what my goal, that is what even your goal. In order to make you pass, I'm ready to do anything. Let us see it. So if you see the audit procedures to identify subsequent events, let us see here. Inquiry of management, whether any subsequent events have occurred, you have to go and inquire with the management. Read the minutes of the meeting of owners, management and others which have held after the date of the financial statements. Read the entity's latest interim financial statements and also obtain written representation. So these four are the audit procedure which auditor has to perform regarding subsequent events as per SA 560. The same thing, we have to write it here. That's what has been written here also. Right. Next one. They talk more about auditor's responsibility also. You refer the balance part of the answer. Next one. Yes. Question number 70. Kundan, a CA student, is part of engagement team conducting audit of an entity. The audit procedures are nearing completion. He notices that engagement partner has asked for a cash flow forecast from the management for the next 12 months from the date of financial statement. See, why do we ask cash flow forecast? By verifying cash flow forecast, what do we want to know? We want to know whether going concern assumption is valid or not, whether entity's going concern will be valid or not. In order to know that, one of the audit procedure which we perform is reviewing the cash flow forecast. Keeping in view above, answer the following. Discuss likely purpose of engagement partner in the above situation. Elaborate upon significance of such testing performed by engagement partner. So depending on whatever they have told, engagement partner is verifying cash flow forecast. What he is trying to achieve? What is his purpose? Because by verifying cash flow forecast, he wants to establish whether going concern assumption is valid or invalid, and also why testing going concern assumption is important. What is the significance of the going concern assumption? Like you have to write, till the time going concern assumption is valid, we prepare the financial statements on going concern basis. In case if the going concern becomes invalid, or in case if the going concern becomes invalid, you cannot prepare the financial statements on going concern basis. You have to value all the assets and liabilities on liquidation basis. Differential should be taken to the statement of P&L. So one small paragraph I have added in the supplementary material regarding importance of the going concern as per SA 570. You have to write that paragraph and also write the relevant answer in line with the question. In the given case, the purpose is to establish the going concern assumption. And also state any two procedures in relation to cash flow forecast. What you are supposed to do regarding cash flow forecast. You have to check whatever assumptions which have been made while preparing the cash flow forecast, are they acceptable? And also you should also understand whatever information that has been used in the preparation of the forecast, is that reliable? We have to check assumptions are correct or not while preparing the cash flow forecast, and whatever information on the basis of which cash flow forecast has been prepared, is that also correct or not? These are the two procedures which you have to perform regarding cash flow forecast. Next one, I think we are almost done. How many more questions we have? Okay, 2 chapters related questions we have. Audit report. Mention some examples of the circumstances where the auditor may consider it necessary to include an emphasis of matter paragraph. Which are they are asking you to write a few examples of the matters which can be highlighted in the emphasis of matter. What are the examples of the matters, guys? Like for example, if you find any uncertainty of outcome of a litigation, if there is any fire accident, that can be explained as an emphasis of matter paragraph. And similarly, if there is any pending litigation, that you can explain it as a key or emphasis of matter. So like that, a paragraph will be there in SA 706 that you can refer. Whatever examples we have given in the material, that examples you have to reproduce it here. Next one. CAS, while conducting audit of an entity, is facing the following issues. He has not been provided with necessary support for attending inventory counting process of the entity at the year end. He wanted to attend the inventory counting, but management did not permit him. Management did not support him when he wanted to do the physical verification. Accounts manager is not providing him with present address of the customers as well as suppliers for sending external confirmation. You want to send external confirmation, but accounts manager is not providing the addresses. Email IDs have not been provided on the pretext of business confidentiality. I want to send them email, even email addresses are not getting provided. He was not able to verify revenues of the entity due to lack of complete details. He was unable to verify revenues also. He has been asking for bills on a sample basis for the purpose of verifying expenses, but staff has been making lame excuses. You see here, auditor is unable to obtain audit evidence because of impose of limitations by the management. Sounding familiar? Auditor unable to obtain audit evidence because of imposition of limitations imposed by the management. In SA 705, we will have one paragraph which says that if you are unable to obtain audit evidence because of imposing limitations by the management, first you should go and ask the management to remove the limitation. If they remove the limitation, well and good, you can continue the audit. If they don't remove the limitation, you have to communicate with those charged with governance. Even after that also you are unable to obtain audit evidence, you need to determine what is the possible effect of that undetected misstatement. If it is only material but not pervasive, what you can do, you can give qualified opinion. If it is material and also pervasive, first option you should be withdrawing. First option should be withdraw. In case if withdrawal is not permitted, then you have to give a disclaimer of opinion. In case if withdrawal is not permitted, then you have to give a disclaimer of opinion. So auditor's inability to obtain audit evidence because of management imposed limitation. Like that one chart also we have discussed in our regular class. So if you read the further part of the question, the matter was brought to the knowledge of his higher management, but of no avail. The auditor CAS has come to the conclusion that the possible effects on the financial statements of undetected misstatement would be material and affecting many aspects of the financial statements, and in such a case, qualification of the opinion alone will not be enough. That means he found that the undetected misstatements are not just material, but it is also pervasive. If it is also material and pervasive, what you should do? To the extent possible, you have to withdraw from the engagement. In case if withdrawal is not permissible, then you have to give a disclaimer of opinion. First option should always be to withdraw. In case if withdrawal is not permissible, then disclaimer. And in case if you are withdrawing, communicate with the appropriate authorities the reasons for your withdrawal. So that paragraph you have to write. So you can refer to the suggested answer. Next one. Audit of different types of entities. Pilferage is one of the greatest problem in any hotel, and the importance of internal controls cannot be undermined. Explain. So they are asking you to write about internal controls in the hotel. So they're asking about how to conduct audit of a hotel. So please refer to the answer. So what kind of controls you should have. So just refer to the answer once. Next one. From the lessee's perspective, highlight main differences between an operating lease and finance lease only in relation to accounting. This is not an audit question. This is an accounting based question. They're asking you to explain differences between what is operating lease, what is finance lease. Operating lease is like a rental agreement. Finance lease will be considered as an asset. In case of operating lease, you can take that expense as rent expense to a statement of P&L, whereas in the case of finance lease, you can charge depreciation and recognize the interest. So that from the accounting perspective, you are required to write the differences. Coming to the next part, audit of banks. While conducting statutory audit of a branch of nationalized bank, it is noticed by CAZ that credit facilities granted to a borrower consisting solely of term loans have been classified as substandard category. During the year 2020-23, due to failure of the borrower to pay EMIs on time. Such EMIs were outstanding for more than 90 days and account was therefore classified as substandard, NPA. CAZ has also agreed to above classification made by branch management. Auditor also agreeing, yes, it has to go to NPA category, that to substandard category. What are CAZ's responsibility regarding verification of compliance with income recognition norms by the branch in respect of above credit facility? They are asking you interest recognition norms relating to NPAs. So if the account turns out to be NPA, what you should do? First, you have to stop accruing the income. You have to recognize only on cash basis. Whatever interest income that is already recognized but not yet realized, reverse it. Not just interest income, whatever other income you have recognized, like processing fee, charges, commission, whatever it is, even that income is also recognized but not yet realized, you have to reverse that also. So just write these 3 points in an elaborated manner. Stop accruing the income, recognize only on cash basis. Whatever interest income that is realized, that is recognized but not yet realized, reverse it. Whatever other income in respect of that asset, recognized but not yet realized, that also you have to reverse it. Next question. Question number 23. While verifying provision of advances of a branch of MCO bank as a part of the statutory branch audit, CAZ notices that credit facilities consisting of term loan to KRT enterprises have been classified under doubtful category. The outstanding balance in the above term loan as on 31st of March is 50 lakh rupees. So total 50 lakhs has been classified as doubtful. In that, secured, the value of the security is 40 lakhs is secured and balance 10 lakhs is unsecured. Balance 10 lakhs is unsecured. The branch has made a provision of 7.5 lakhs is the provision made by branch proper. This is also not an audit question. This is an accounts question once again. So they are asking, management has created a provision of 7.5 lakhs. Is it correct? Now for this, we need to understand provisioning requirements. So the Banking Regulation Act says, in case if the asset is classified as doubtful, if it is secured doubtful, 25% provision you have to create. If it is unsecured and doubtful, 100% provision you have to create. So now in the doubtful asset, 40 lakhs is secured. So in this 40 lakh, 25% provision you have to create. If you create it, 10 lakh rupees will be the provision for the doubtful secured part. 10 lakhs is unsecured, 100% you have to create. So here, an entire 10 lakhs we create a provision. Total provision which should have been created in the books of accounts is 20 lakh rupees, but the management is creating only 7.5 lakhs of provision, which is actually wrong. So you need to understand, you have to bring from the accounts what are the provisioning requirements. In case of doubtful, if it is secured doubtful, 25% provision. If it is unsecured doubtful, 100% provision. This you have to remember, do the calculation and present it. Next, ethics and terms of engagement. In our material, we have actually combined this chapter also with nature, objective and scope of audit because of its importance. I don't want to keep it at the last, so that's why I have clubbed it with nature, objective and scope. Let us see the questions now. CAX has been offered audit of financial statements of TDK Industries, a partnership firm. Prior to accepting proposed offer, he insists upon obtaining an agreement of the management regarding acknowledgement of its responsibility of having a proper process in place to ensure that financial statements are free from material misstatements. That means before accepting the audit, the auditor asked the management to confirm that they have a proper process in place which will make sure that financial statements do not contain material misstatement. What do we call that process as? Internal control. So auditor asked the management to give a confirmation that they are responsible for implementing internal controls which are free from material misstatement to make sure that financial statements are free from material misstatement. Is it auditor's responsibility? Is it auditor's responsibility or management responsibility? Implementing internal controls in the organization to make sure that financial statements are free from material misstatement. This is whose responsibility? This is management responsibility. Why? Because even in preconditions also we have read the first responsibility is preparation of financial statements. Second responsibility is implementation of internal controls. Third responsibility is to provide the auditor with access to all information, additional information, unrestricted access to persons within the organization. So yes, auditor is correct. He is asking the management to give a confirmation that they are responsible for designing and implementation of internal control. To this, what management has replied? However, management is of the view that it is the auditor's duty to detect material misstatement in the financial statements, and such an insistence by the auditor is totally uncalled for. Management is telling, boss, you are required to detect misstatements. Why are you asking us to implement internal controls? Whose view is proper? Management or auditor? Auditor's view is only proper. Yes, auditor will detect. Auditor's responsibility is not completely detecting misstatements. The responsibility for prevention and detection of frauds and errors always rests with management. So it is the responsibility of the management to implement internal controls to make sure that financial statements are free from material misstatements. That's what auditor is asking the confirmation for. Auditor's view is 100% correct. But management is telling, no, we are not responsible for implementing internal controls, which is obviously wrong, 100% wrong. Also discuss reasons for arriving at your conclusion. What is on what basis you are telling? On the basis of preconditions to audit, I am telling. What should be likely proper course of action? See, if the management is not agreeing to preconditions, what you are supposed to do? Don't accept the audit. Unless there is a legal or regulatory requirement, if the management is not agreeing, not giving confirmation regarding preconditions, you should not accept the audit only unless there is a mandatory requirement under law or regulation. Next one. Second question. SA 220 is premised on the basis that firm is subject to SQC 1. What do you understand by the given statement? Nothing but, see, we have two standards regarding quality. One is SQC 1 and other one is SA 220. SQC also talks about quality control, but SQC talks about quality control at the firm level for all kinds of engagements, whether you do audit, whether you do review, whether you do assurance, whether you do related services. For all kinds of engagements, how to maintain quality, that SQC 1 says. Whereas SA 220 is also standard which is talking about quality control, but this standard specifically talks about how to maintain quality control only in the case of audit assignments only. So it is 100% true that SA 220 is premised on the basis of SQC 1. SQC 1 has been developed for maintaining quality control for all kinds of engagements. Out of that one part, how to maintain quality control regarding audit engagement, that is what covered in SA 220. So that's why SA 220 is actually based on the guidance given by SQC 1 only. That is what the question is also asking. SA 220 is premised on the basis that firm is subject to SQC 1. Nothing but SA 220 has been structured on the basis of SQC 1. Do you agree with that? Yes. And they're asking you to elaborate, same explain this. SQC 1 talks about quality control at the firm level, talking about different kinds of engagements, whereas SA 220 talks about only a quality control of audit engagement. So SA 220 has been drafted on the basis of SQC 1 only. So try to explain this in a paragraphical manner. Refer to the suggested answer, how it has been presented. Clear? So this is what regarding RTP. Hope you would have found this RTP video informative, and definitely you have to refer this RTP before you go for the examination. Clear? Refer to the suggested answers also once so that you get the feel of presentation, how you are supposed to present. You will get to know it only when you refer to the suggested answers. Clear, everybody? So this is what regarding RTP. Hope this video helps you out, and if you find it informative, please do share it with your friends also. Thank you guys. Bye.